Well, so the topic today is future ready insurance industry. Future ready insurance industry. See, Indian insurance sector is at an inflection point today. The regulatory body, that is Insurance Regulatory and Development Authority of India, has taken up the vision of insurance for all by 2047. This 2047 is very important because India is completing 100 years of independence in 2047. So every Indian has appropriate life, health and property insurance cover, and every enterprise is supported by appropriate insurance solutions by 2047. So as the industry steers towards a principle-based regime, the regulator has constituted the team in mission mode. So this risk-based supervisory framework is the urgent requirement now. So with a view to promote a principle-based regulatory regime, foster ease of doing business, reduce compliance burden, and encourage proactive risk identification and management, the regulator in June 2022 recognized development and implementation of a risk-based supervision framework for insurance sector in India as a mission mode project. So this risk-based supervision is forward-looking approach that aims at mitigating risk, safeguarding the interests of policyholders, and ultimately maintaining the stability of the insurance sector by enhancing supervision focus on the manner in which the risks are identified, measured, and managed. So the regulator has been engaging with various stakeholders on a continuous basis for ensuring smooth implementation. The first phase of pilot for RBS has recommended from July 2023. So this is risk-based capital, because current solvency regime is based on a two-factor based model, whereby regulatory minimum capital, that is required solvency margin for life insurance business, is determined by applying factor on mathematical reserves and sum at risk. So similarly, RSN, that is a regulatory required solvency margin for general insurance business is derived by applying factors on written premium and incurred claims. So with the objective of designing a framework for risk-based capital and its implementation, IRDA has constituted a RBC mission mode team in the month of June 2022. So the RBC framework would serve as a pivotal mechanism to enable insurers and reinsurers to maintain an appropriate level of capital commensurate with the risk inherent in insurance and reinsurance business. So this INDRBC, Indian Risk-Based Capital Framework, aims at identifying various risks faced by insurance and reinsurance companies and quantifying each risk following probabilistic approach. Now, IRFS and INDAS implementation. Since June 2022, IRD formed a dedicated mission board term comprising of officials from accounting and actuarial background to work on effective implementation of International Financial Reporting Standards, that is called IFRS, INDAS in insurance sector. So while the INDAS 117, the equivalent standard for IFRS 17, is yet to be notified, IRD has been continuously engaged with the insurers and stakeholders to nudge the industry towards a smooth implementation of IFRS. Studies were made to understand the experience of various jurisdictions for implementation of IFRS, and constant efforts are being made to encourage capacity building for implementation. So an expert committee has also been constituted by RDI, which has representations from ICAI, IAI, insurance industry, and the IRDI to address the concerns involved in IFRS and in INDAS implementation. So the regulator is working towards a future-ready insurance industry because they have the aim, the vision of insurance for all by 2047. So that every Indian has appropriate life, health and property insurance cover, and every enterprise is supported by appropriate insurance solutions. Industry is steering towards a principle-based regime, and IRD has constituted the teams in mission mode. The risk-based supervisory framework, risk-based capital, and IFRS INDAS implementation are the parameters which needs to provide the insurance for all by 2047. Because principle-based regulatory regime will foster ease of doing business. It will reduce compliance burden and encourage proactive risk identification and management. So IRD has already recognized and had decided to implement a risk-based supervision framework for insurance sector in India. So as a mission mode, the project risk-based solution is a forward-looking approach that aims at mitigating risk, safeguarding the interest of policyholders and ultimately maintaining the stability of the insurance sector by enhancing supervisory focus on the manner in which risks are identified, measured and managed. So time now is to see the regulator has been engaging with various stakeholders on a continuous basis for ensuring smooth implementation. The first phase of pilot test for RBS has commenced from July 2023. So today, if you see, almost 1 year is completed. And even in the area of risk-based capital, current solvency regime is based on two factors. The two-factor based model, whereby regulatory minimum capital required solvency margin for life insurance business is determined by applying factors on mathematical reserves and sum at risk, while for general insurers, business is derived by applying factors on written premium and incurred claims. So with the objective of designing a framework for risk-based capital and its implementation, the regulator has constituted RBC Mission Mode team in the month of June 2022. This RBC framework would serve as a pivotal mechanism to enable insurers and insurers to maintain an appropriate level of capital commensurate with the risk inherent in insurance and reinsurance business. See, INDRBC, that is Indian Risk-Based Capital Framework, aims at identifying various risks faced by insurance and reinsurance companies and quantifying each risk following probabilistic approach. So this is the time now to see and review the working done by the IRDA towards a future ready insurance industry. Thank you.